It's on now.
It's on now.
Perfect.
And her machine does not do presenter notes. All right, not to worry. Okay. The idea was so talk about the Finance Act 2021. What are the emerging tax issues from a turnover tax perspective, minimum tax, voluntary tax disclosure, and how to manage the carrier audit when the rubber meets the road, so to speak. If I look at this year's Finance Act, and it's important just to highlight this, looking at trusts, or what they're calling payments from registered trusts, that came into play this year, such that payment to beneficiaries, when you use it exclusively for either education, medical treatment, or early childhood housing, and the payments are below 10 million a year of income, those are exempt from tax. And it's important as Rotarians, and most so now that we are in a world of COVID. When you're 6 feet under, have you put your orders in place? So looking at trusts is one of the things I'd highly encourage all of you to look into, in terms of just having a trust in place, such that when the rubber or when things go south, you are able to take care of matters post you being 6 feet under. So that came into place, and it's purely driven as a result of what we've seen on the COVID times. To raise revenue, they've introduced what they call the digital services tax. We like calling it in our own world DST. And really is those of us who've gone online, because everything on COVID then moved online. All of a sudden, stores and shops became redundant, and Instagram and Facebook became the new shopping ground. So where you've got an online platform where you sell and provide services, your side hustles, carrier watching, okay? And obviously I know part of your participants tonight, you've got carry for sure, and they're watching, and they've got people who basically watch and see what you're doing online, and then DST that applies. Then we thought about it, and then when we thought, because I chair the Public Finance Committee of ISPAC, we had a change and said, look, as a resident person anyway, you're paying tax normally through corporate tax. So they changed the law to say, okay, it's only non-residents that will be subject to DST, and works more like VAT. 20th of the following month, it's a due date. Then there are a couple of exemptions where non-residents have been subject to withholding tax. It's normally 20%, or then it's reduced if you have a double tax agreement to 12.5% or 15%. It's a high income, obviously, so those are exempted. If you're transmitting messages by cable, radio, fiber optica, TV broadcasting, internet, satellite, those again were exempt because they are taxed at a higher rate in the current tax regime. Then there's minimum tax, which was introduced, and I'll touch about minimum tax in a bit more detail. The exemptions in there were manufacturers, where the investment is 10 billion above in the last 4 years of ascent. Your license under the special economic zone, and your distribution business is fully based on commissions. That again is exempt from minimum tax. Previously, losses had been capped for a period of 4 years. Then that was changed to 10 years after lobbying. Now it's been removed, and the why they've removed, which is obviously with now minimum tax being introduced, even if you're making losses into perpetuity, you pay tax, some form of tax in form of minimum tax. And that was a compromise that came through in the Finance Act 2021. Then you've got thin capitalization, and thin capitalization Again, the interest expenses are allowed. I always say it's 30% of the earnings before I tricked the damn auditor, or earnings before interest, tax, and depreciation. And that restriction applies to all loans, payments, economically equal to interest. And the idea about this was to really kill our clever tax planning, because we were the tax plan on think up quite a number of things. So they try to clean up and ensure there's no more tax planning. Then you've got submission of group returns, where you've got the ultimate parent company submitting an annual return with, within the month. The ultimate parent company being a company in Kenya, not controlled, it's owned by multinational, and the disclosures. And again, it's about a lot of visibility. And this proposal is in line with the OECD guideline on international best practice. And the idea is to limit what we call base erosion, so to speak. And those provisions are currently applied in the UK, in the States, Aussie, Canada, and Uganda. If you look at the multinational enterprise group, it's a group, it's more than two, then the submission of group returns, and it's all just about visibility. Then we've got what we call a limitation of benefits under the double tax agreement. And the idea was previously you would form companies off the shelf, do a GBC2 entity in Mauritius. Mauritius changed the rules and just became a global business entity. We moved to the Isle of Man, we moved to the BVIs, and these are structures which are companies off the shelf, and they worked very well for tax planning. Again, they've now said the benefits are not applicable if 50% or more of the underlying ownership is a person who are non-resident in the other country. So again, it's just ensuring that they close the taps on tax planning. But again, there are clever ways of still structuring that we mutate when Kerry closes some windows. Tax rebate, TVET graduates, to ensure that we employ a bit more of TVET graduates and provide them with internships. That again, the rebate has been put into place. And then strangely enough, NHIF contributions, you never used to qualify for insurance relief. Now you qualify for insurance relief on NHIF. So again, that's a positive thing because NHIF is mandatory when you employ guys. Investment allowances, cleanup, straight basis, producer of electricity. If your investment is outside Nairobi or Mombasa, it's 100%. If it allows more than 2 billion. But the importance is on this investment allowance. When you do an office block, you can also get a capital allowance. And it's one of the ways you can use in a very clever way to reduce your tax liability. Currently, investment deduction was only allowed on persons who are generating electricity and transformation and distributing to the national grid. They've now expanded that, just saying it's 50% of producers of electricity and not restricting it to supplying to the national grid. And that means then we'll be able to see a bit more of IPPs coming through in the country. Exemptions from income tax. If you gain from transfer of proceeds on a registered family trust, so that's exempt from income tax. That means I think it's a good vehicle for you as an individual or as a business to arrange your affairs and form a family trust, so that when you're 6 feet under, at least the trust works and benefits those who you set up as beneficiaries, and the transferring that or the proceeds into that registered family trust is exempt from income tax and becomes easy. Just clean up and ensuring when you kick the bucket, things are a bit clean. Income and principal, again, on the register family trust. So the key is you have to register a family trust to take advantage of this exemption. And it's a good vehicle to plan your affairs while you're still breathing. This was interesting, which came up into place right after the Finance Act through a notice. Clearly, sugars and locally white chocolate. So what shocks me is, do we really have a factory that manufactures white chocolate in Kenya? So that, and the quality white chocolate. It was before exempt, now there's a tax of 200 shillings per kg, and it's supposed to protect the local industry. Imported glass from EAC to silent, now it's exempt. In a world of COVID, we are hosting this meeting, for example, virtually. You'd expect then to have a bit more incentives in the telephonic and data space, because we've gone digital. But again, I think government has seen a share of revenue there, and they say telephone and internet data services, they're going to collect a bit more on that. So if you look at your bills or your airtime as you load, the tax now is up from 15% to 20%. Again, to ensure that we don't smoke, the products containing nicotines, which were for, you remember this funky cigarettes that were there. You need to light them, but they're really picking up with the youth. They look really, really bougie. They're now making sure they're expensive, 1,200 per kg, to ensure that that's discouraged. Betting and gaming, so at least this saves the pain on Arsenal fans, because we are forever losing. So the idea is to avoid betting completely in gaming. So whereas it was a nil rate, it's now 7.5. And this is one way we use tax as a way of killing an industry. And tax has been used aggressively to just kill the betting industry, because you can see it's really ravaged the youth as a result of betting. And again, even price competition, again, a higher tax of 7.5% of the value paid. And the whole idea, again, is just to ensure you finish betting completely. Fees and commissions on loans, there was no rate. Now it's 20%. They realize all these mobile loans, people are minting money off that. So they've gone ahead and now ensured there's a high tax of 20%, again, to contribute to the exchequer. This was interesting, jewelry. Okay, so if you have not proposed or gotten married, your jewelry will now be expensive. And the jewelry is really broad. There was no rate before. Now there's an excess duty of 10%. Same applies to plastic, imported pasta, imported furniture. So if you are not upgrading your homes, well, that is high. Eggs, onions, potatoes, crisps, again, to protect the local industry. I'm aware that the jewelry, they've come together. They've gone to court to obtain orders against KRA. The imported furniture through Mtata, again, they've gone to court to obtain stay orders in there. Because again, the challenge is we don't produce quality furniture. And that's why the other import market has really kicked up. So as you say, you're doing a protectionist approach, have we leveled up to the point, to the level that we are producing the right quality furniture as an alternative? And it'll be interesting to see how the courts rule when that matter appears before the judge. And then other acts, and this is important. This is where I tell people, make your accountant your best friend. When you fire them, hug them. and treat them nice, because they're the ones who snitch to KRA. In my 25 years of doing tax, most of the people whistleblowing at KRA would always be accountants who are mistreated on exit. And KRA appreciates that. So they've now increased the reward from 100,000 to 500,000, not giving any Rotarians ideas. You can imagine the kind of money that KRA is giving. And then they've increased the reward where they recover and assess tax. They've increased that reward from 2 million to 5 million. So some people can make this their side hustle, just ensuring that they snitch to KRA. So that for me sends shivers down my spine. What are the emerging tax issues? And I guess this is where now I think we get into the conversations. Government has to raise revenues. Initially, we had a BBI to fund. Thank God the Court of Appeal has set it aside. We've got national elections coming up in August next year. Against a backdrop of COVID, where the biggest revenue contributor was pay as you earn or pay as you eat, PAYE. And that has really dropped because of redundancies. And then you've seen corporates also struggle last year in the height of COVID. There were quite some shadows in the economy. With curfews, the restaurants and the entertainment space, and I happen to have an investment in that area, were bleeding. Tourism, which was to be a huge contributor, were bleeding. Yet, despite all these dynamics, we still have to fund and meet our exchequer requirements. We still have to meet our debt obligations as a country. Remember, our budget is about 2.1 trillion. Revenue collect about, this year they managed to do about 1.3 trillion. We'll still have a deficit which we borrow, and our loan repayment is about 890 billion. So we have quite a bit. So government has to raise revenue, hence turnover tax into place, minimum tax, and then I'm going to talk about the voluntary tax disclosure program, or what I'd like to call an amnesty. So there's a huge registration drive and follow-up for digital services and VAT on the market providers, again, to try and increase monthly exchequer. Minimum tax was put into play. The bar owners went for a judicial review. That matter, so the stay order, so the tax has been put in abeyance. Justice Odunga in Machakos gave very good rulings in there. So that's been put on hold. So it's a hold against revenue collection. That void has to be filled. Then you go to review taxpayers seeking remissions under the voluntary tax disclosure program. There's an enhanced recruitment of landlords, informal taxpayers, professionals, companies, and then individuals trading online. Then they've revamped the audit functions of both the large taxpayers office, the medium taxpayers office, and even the various regional offices, what we call RAC, the regional audit centers. They've revamped and they're deploying technology in there to try and get to know more about you as an individual. What are you doing? And then enhancing the carers debt program by making use of iTax. And right now you find that everything is linked to your PIN. And it's interesting how iTax, when we conceptualized it, and at that point, I was the steering committee for KRA representing ISPAC, and at that time, Njirani then was a CG. it's just a thinking on how iTax was meant to be, connecting everything. It was simple, just thinking, for example, my son, who's now 22 years old. When you finish college, what's the first thing they do? When you get a good job, you get a car. So when you get a car, the first thing was to think about register motor vehicles, link them into iTax, such that if you buy a car and the cutoff is 2 million and you're filing a nil return, you ask, hey, what are the source of funds? When you make a bit of more money, what do? Buy a flat. If you buy a flat, then you pay a stamp duty. You've paid a stamp duty, great. What are the source of funds on this flat? And when you do buildings and landlords, again, that is linked into iTax. And that's how the collector of stamp duty was transferred from the Ministry of Lands into KRA. The register of motor vehicles was moved at that time from Kimunya's ministry across into KRA. And it's just doing lifestyle audits and all that being linked to KRA. The banks have resisted, but again, through the CBK, in some amount of time, banks could be doing proper reporting on people above $1 million bob into CBK, and that will be shared to KRA. So it's using technology to get you, okay? Some initiatives to improve customs revenue, post-clearance audits, profiling, cargo scanning. Cargo scanning is interesting. There's a time a 40-foot cargo was scanned, and on the declaration, the guy had declared needles, sindano on a 40-foot container. That's needles for the whole of Africa for the next 5 years. But in there were electronics. The issue for consolidation and deconsolidation has been a funny issue. But again, they've now come up with a blanket way to tax that. This week, we've seen, I don't know, actually it's next week, on Thursday, there's a public auction happening at JKA as a result of when you've arrived, you haven't declared, it's confiscated by KRA, and they intend to auction that. So there's a lot of now cargo scanning. If you come to the airport, it's no longer fungua bag. It's put in through a scanner. They see you've got your personal effect of what you've brought in, and they charge you tax. There's robust intelligence collection, utilization, and investigation. The investigation department has been revamped quite well, and they're obtaining information about yourselves. And then ADR, swift resolution of tax disputes with the big ticket tax cases, go into ADR, have a conversation, and resolve the matter. Independent review objections, a guy called DM Wangi now heading that. Within 60 days, with big priority and big ticket cases, to be able just to resolve that. The judiciary, they've been told fast track pending cases so that we're able to collect that revenue. And so some of the just aggressive things the government is doing to raise the revenues. If you look at the turnover tax, is it really a relief to SMEs? It's applicable to businesses turnover is between $1 million, but not exceeding 50 million. And then the rate was reduced from 3 to 1% of the gross turnover. I always say, be careful before you rush into turnover tax. Because remember, if you elect the other method of corporate tax, you claim all your expenses and you'll be surprised. 1% of 50 million and vis-a-vis you doing a proper income and expenditure statement, what that looks like. So you have to make a very informed decision on turnover tax. Previously, incorporated companies were not subject to turnover tax. Now they are part of the bandwagon. It doesn't apply on rental income, which is a shame, because I think if we apply it on rental income, we'll have more people coming into the tax net. It doesn't apply to management professional fees, So our likes is Anderson. Sadly, we cannot elect turnover tax. And then any income which is subject to withholding tax as a final tax is not subject to turnover tax. I always say evaluate if you need to get into turnover tax before jumping into it swiftly. Minimum tax, again, it's a base income tax, currently suspended. My view is, I think the judgment will be against revenue on that. But how it was envisaged to work was a rate of 1% of the gross turnover, payable in 4 installments, just like installment taxes on the 20th of every month, be it April, June, September, and December. But again, we've got stay orders against that. So we'll see what happens when the court rules. Again, it doesn't apply to exempt income under the Income Tax Act or employment income, so that you have to pay under pay as you earn. Obviously, it's a higher rate of 30%, where you're subject to turnover tax or capital gains or residential income tax. Those are taxed by a different regime. And obviously, the extractive industry, they collect the money, they won't be under minimum tax. And there's a whole thing comparing installment taxes on a current year and a prior, looking at 1% of your estimated gross. But again, because it's on hold from on court, I won't dwell much on that. I just thought it's good just to share what minimum tax is all about. This, I think, is where I goes right in for you as businessmen, as Rotarians. So we've got a disclosure program, what I call an amnesty. Okay, it's going to the priest and going for confession, and based on that, then you're able to be forgiven or given your penance. The way the amnesty works is you go and disclose your tax liabilities to carry, pay the principal tax, and year one, which is ending in December of this year, you're forgiven 100%. Year two, that goes to 75%, and year three, 50%. And it's something we pushed as an ISPAC then, big chair in that committee, to ensure that we've got a longer term voluntary disclosure program. Previously, it was just 1 year and it's done. And it makes sense. Let's make it a bit more long term. And I'd say it's something you need to look into and take advantage of that. As I said, so when you make a disclosure this year, you get 100% waiver of the penalties and interest, and you have to pay the principal tax. Second year is 50%, and the third year, as I said, is 25%. And then if you take advantage of the amnesty, you be granted immune from prosecution. And that's key, because Kerry are now thinking prosecute, okay? So you get a relief out of that. What should you do as a taxpayer? Engage your auditors. You're in different fields, you don't know tax like your auditors or your tax advisor. Let them review your business. There's a saying in Kikuyu that says, a baba cannot shave the back of his head. So let's have a look at your business, do a review of that. What are the liabilities? And then help you lodge that with Kerry and take advantage of that. But should you decide, well, you know, I'll be a Macbende, I'll chill, I won't take advantage of amnesty. When Kerry comes, I shall do it. How do you manage Kerry audits when they come? Because for sure, as the sun will set, Kerry will always come for you. And the question then that one poses is, why me? Why should I audit Rotarian Mutanu and not Rotarian Norman or Rotarian Joy? What's the basis? What makes you get onto the sites of the taxman? What are the triggers? They do what we call risk profiling. And the question then is trend analysis. If your PAYE is erratic, this month you're paying 20,000, next month 40,000, third month 15,000. You don't hire and fire people like this. So trend analysis, that consistency in tax remittances then becomes a trigger. They benchmark you against your industry. What's your industry norm? Are you off the mark on your industry? Intelligent gathering. They were asking about KRA with whistleblowers. Okay. And then some sectors which are peculiar. Yeah, prevalence of cash transactions. Do you have offshore activities? We were one of the first countries in Africa to adopt IFRS way back in 1999 when we dumped the Kenyan accounting standards. So our disclosure requirements are pretty high. Okay. When you've got a related company offshore, that is a disclosure note. You're picked up from audit by KRA. Then, in my 25 years of practicing as a tax professional, I've never seen a company whose objective in note 2 of the account, they're in the business of making losses. Yet you find a company has been making losses from inception and they're still in operation. And that's why minimum tax has been introduced. When you're making persistent losses, the KRA will have a conversation with you. Then as individuals, nil returns. Yet on the other side, your PIN indicates you have a fancy bank account, you have a car that you drive, you have a home that you own, you have a plot that you have in Mavoko. I mean, the PIN exposes you, okay? And now KRA have taken a bold step, said, once you file 3 nil returns, the 4th one will reject and call you for a conversation, okay? Special considerations, do you have a large investment deduction claim, transfer pricing, compliance records? So, what's been your trend in the past? Have you been a good boy or girl? Reconciliations, and this tomorrow morning when you all get to your offices, look at your VAT returns that you submit for last year. There are 12 of them on a monthly basis. Does that turnover reconcile with the turnover in your accounts that you declare? If you have a difference, talk to Joy and she will lead you to the right places. Your PAYE returns, the monthly ones that you do, there's a gross number. That number and what you declare in your accounts that submit to KRA, is there a difference? There is a trigger. Your standard of living audit. This is one, again, gone are the days where KRA was an old haggard guy that hung a coat and did these things. They live amongst our community. In this club, you're a couple of KRA guys that are part of you. And I always tell people, and my friends KRA will forgive me for this, from the days of Zakayo, the taxman was never our friend to the society. So never lie to yourself that KRA is your friend. They'll never be. They're there to collect and make a living by meeting the government exchequer. Again, disgruntled employees and third-party information. If you have a KRA audit, what do you need to do before the audit begins? It's always good to get confirmation from KRA on the audit. Commencement period, review, ideally is 2 years, the documentation required, the scope of taxes are covered. And then I've always said, KRA, it's a human being. Treat him as such. Then confirm, is it a compliance check? Is it an in-depth or an investigation? And the type of audit then determines the kind of artillery you remove that you need to deal with. The news of an audit is going to be civil carry. The human beings are once an audit whereby they are put into a store with dust and all that. And they went up digging in that store and they stumbled upon some management reports and they used that to hang us. One, I think, client who decided when Karek checked in, it was a time to clean his gun. Another one decides when the Karek comes, the time to open up the rotoras to roam in the compound. Again, if you're not civil to them, they'll be hard on you, okay? Always provide the necessary information, engage a tax agent. Don't go blind, don't fly blind, okay? Always prepare for an audit in advance. Nobody knows your business more than the KRA. I always say, use the shepherd's approach when dealing with KRA and gather all the necessary records in place and treat them well. Never try to hide information from KRA, they'll find it. Don't deny access to KRA, then it becomes adversarial. Falsify records, bring some deals on the table. One of the things I always say, don't do that. I think I'll stop there and encourage questions and answers. And thank you very much. And back to you. Back to you, Wango Butua.
Amazing, amazing, amazing. Really, really interesting. Very, I think it's the first time I'm listening to a presentation on taxation and still following through the engagements. It's very interesting, the examples you're giving. I wish to invite back Rotary and Joy to take us through the question and answer session. Rotary and Joy.
Hi. Hello, Philip. Thank you very much. Can you hear me?
Yes, I'm here.
Thank you very much for that presentation. I'm still stuck at the whistleblower fee, and I am having ideas and still shocked at the same time. So let me see the questions. There is Prezo said we need a speaker to take us through registration of a family trust. I think that's based on your first point. And then there's a question here. Is there a statute of limitation on the period after which KRA can come after you for unpaid and assessed tax?
Thank you. Let me take that. So thank you, Kimani, on that. So yes, under the Tax Procedures Act, it's 5 years. And then should they suspect a fraud, then they can go to 7 years. But ideally, it's the last 5 years based on the Tax Procedures Act. And that's been the norm. And obviously, they've always been comfortable dealing with the statute under the TPA Act. Back to you, Joy.
Any other questions? I don't see any other questions in the chat box. Anyone with a question? The comments here, very informative. So much info. Mutanu is reminding us to pay our SAA. Great presentation from Bernadette Kamene. Merab says, thank you, Philip. Norman Mudibo, Philip, that was a great presentation, proposing that we have a quarterly tax session like this. Any other question?
I can see Walter Diambo's hand is up. Walter, please go ahead.
Yeah.
Yeah. Thanks a lot, Philip, for the beautiful presentation. Now I have like 2 questions. One, when I actually registered my company in 2014, it took a while to get a PIN because of the iTax issues. One reason or another. So I won't expound more because it's more complex. Now, when I started searching for business, things were not working out quite well. So at one point, I thought I deactivated the PIN, which probably did not work out successfully. So it's like the VAT, how do you call it, penalties were piling. The monthly VAT taxes penalties, and it went that way for I think 10 months or so. So when I realized, I actually wrote an email to KRA to try and explain myself to get the penalty you're talking about, the waiver you're talking about. And it's taking a while because I did that application in 2016, May. And up to date, I've never received a convincing reply. So what's the best way to go about this?
Thank you, Walter. So
the best way to go about this. Thank you.
Yeah, thank you, Walter. So the best way to go about that is you've got to go to the station where you fall under, okay, and sit across the station master and have a conversation face to face. I always say email conversations or all these digital things, it never works. Go across the station, have a conversation with the station master. Glad to help. Sidebar me, pick up my contact, sidebar me, and I can help you just deal with that.
Okay, thank you. Another one, a second question. Actually, I haven't focused on the company for a while, but I've been getting business from some other ventures. So I've been depositing a lot of cash into the business account, the company account, that is. Can this be an issue? Can maybe the carry come for me like you are saying? They can come for me and they realize there's money to the account.
Walter, indeed, if you're depositing money into yes, indeed they will. And I'm hoping you're not team nil returns. I hope you file you file some returns. If you file nil returns,
I file nil returns.
You file nil returns.
I don't do business in the company, but I deposit money into the company account.
So the money deposit, what is the source of funds?
Come from some. You actually see, I'm a land surveyor by profession. The company, it's a general company, is meant for something else to actually expand my income. But now the land survey can kind of gets in some cash, so I deposit there.
Odhiambo, come for a cup of tea, Walter. Come for a cup of tea.
Okay.
Joy, back at you.
I don't see any other question. Is there anyone else raising their hand? No. No. Merab talking about dollars. They're happy dollars there. So I don't see any other question. So I think I can give my vote of thanks at this point.
Yes, proceed.
So I want to thank you so much, Philip, for honoring our invite and joining us today. The audience may not know this, but I know you have been invited to other clubs and you have not honored all invites because of your busy schedules, but this one of ours, I feel special, we feel special that you have you have honored us and given us your evening today, taken some time off from being a dad. And we appreciate you very, very much. And we look forward, like somebody suggested, that we have quarterly speeches from you and anybody else, but we look forward to hosting you again in the near future. Philip is a hopeful Rotarian. I hope and pray that he joins for Langata. He wants to join the DG. Maybe, well, he lives too far, so we cannot try and convince him to join us, but we hope that he becomes a Rotarian in this new induction that's going to happen soon. Philip, thank you very much. And on behalf of our club, we appreciate you.
Most welcome, members, and thank you so much, and have a blessed evening.